what are the top 10 tax tips that real estate agents should know right now? Now, the number one thing to really keep in mind here is that you are a business owner, okay? You need to now realize that what you do that is like other businesses, that is actually where you will have the best cash flow, build the most wealth, and actually save the most taxes. Now, if you want to follow along on this, check out the link below and you can go to the article to grab this for yourself plus other goodies. Number two, set aside 25 to 35% of every commission for taxes. Oh my gosh, that sounds like a lot. Set up a separate bank account, move that money into it. The reasoning for that is that when you now think ahead and you know that you've got money set aside for taxes, that psychology of that will lead to you wanting to ensure that you are not sending in any more than you have to. Number three, do not sleep on deductions, okay? It's more than office supplies and cell phone, right? There's a lot of obviouses, but I've also got a link in the body here to a more than 100 list of expenses for real estate agents. It's a spreadsheet I put together for my clients. But on these deductions, I really want you to understand two things make something a tax deduction. And it's under Code Section 162. And it states this, is that if something is ordinary necessary to your business and your intent is for business, then it's a business deduction. You're right. We could be a bunch of silly gooses and come up with a bunch of ridiculous ways that something is a write-off. But guess what? Something is typically always a write-off with a realtor. What do I mean by that? Well, I've got a whole series where I talk through this, but I want you to think about this. It's very simple when I talk to my clients. Listen, you know what is a business tax deduction better than me. Because what is ordinary necessary to your business is determined by you. What is your intent? Well, you only know that. So yes, are there certain things that aren't deductible and obvious? And we go, oh, what are those? Here it is. You ready for it? If you would spend that money no matter what, meaning it doesn't matter if you're a business owner, it doesn't matter that you're a realtor, you'd spend that anyways. Well, then it's not a tax deduction typically for your business. Now, health insurance, well, you'd spend that no matter what. Yeah, you get to tax deduct it. Vision insurance, dental insurance, long-term care insurance, yeah, you'd probably do that anyways. Well, that is a tax deduction. But most business deductions, when you're really kind of scratching your head, is that a write-off? Is that not a write-off? It really comes down to this. Is the only reason you're spending that money is because you're a realtor, because you are a business owner? Because if the answer is yes, then that's a tax deduction, okay? That's really what you've got to capture. You can listen to all the TikTok videos and other YouTube channels and get probably some ideas. But see, the reality is that if you're convinced something's for business, it's because it's ordinary and necessary, and your intent was for business. See, I don't ever have clients that we have discussions where they're like, so can I write this off? Because if I'm now taking my eyes back and forth and I have to do this and talk in a funny voice and smirk, how's that a real business deduction? But if I say, yes, I'm going to Florida. Yes, I'm going with business associates. Yes, I'm going to be staying in this hotel with airfare. Yes, we're going to be looking at other real estate properties. Yes, we're going to be looking at customers, options. We're going to be following up. Yes, we are there for business. Then how is that not a write-off, right? Mileage versus actual expenses when we talk about your auto. Number 4, you got to choose wisely in that first year. That's really the key here. In the first year of your use of that vehicle for business purposes, track your miles and then go, okay, of my miles times the mileage rate, well, what's my deduction? Or what's my business miles as a percentage of my total miles, and multiply that by the actual business expenses, including depreciation, and what's higher. For many realtors, that actual expense, depending on the car that you're buying, because it's year after year after year, is going to be real close to the mileage. Now, if you're buying an SUV or an over 6,000 pounds, the actual expenses might be more, but will that be the case? Because here's the big secret to keep in mind. And when I say secret, these people forget about this, okay? Which is this: in year one, if you use the mileage method, then in following years, you can use the mileage or actual expenses. But if in year one, you use actual auto expenses for your tax deduction, well, then you're only going to be able to take actual expenses in year two and following. The home office deduction number 5, oh my gosh, it's so misunderstood. For a realtor, there's no way that you're not working at home. You want to establish a home office. It's not a flag. Hear me. It's not a flag, okay? And they have a simplified method. Even if you're convinced they're going to knock on your door, knock it down, and drag you out because you took a home office deduction. By the way, most home office deductions might be $400 or $500. It probably saved you about $150 in taxes. Why is that a flag? It's not. Taking a $500 deduction, $800, $1,500 deduction is not enough to flag your return. I don't know who's coming up with this, but it's those that don't know what they're talking about. But on the home office deduction, here's the biggest secret. When you have a home office, and for a realtor, you just do, okay? Like, just read about it. Check out my other seminars on this. It just is, okay? Then when you leave your house, your apartment, your condo, whatever it is, and you're headed to a business appointment, your miles immediately count for business purposes. See, if you don't establish a home office and deduct a home office, then your miles don't count until you arrive at your first business activity for the day. So it's huge, the home office deduction. I mean, goodness, take 3 feet by 3 feet, 9 square feet, times $5, take a $45 deduction, but show that home office, declare it, because there is case law out there in tax court cases where when somebody deducted a home office, it allowed them to take those miles directly from their house when going to a business activity first. Next, number 6, quarterly tax payments are a must. Why is this a secret? Well, it's not really a secret, but you know what? So many don't realize that if you don't pay quarterly estimates, you don't pay your taxes evenly throughout the year, slap yourself, dump a big old bucket of ice water on you, you're going to pay penalties and interest. That is insult to injury. You've got to pay in quarterly estimates April 15th, June 15th, September 15th, January 15th. There are underpayment penalties for not getting those estimated tax payments done correctly or timely. There's some safe harbors to it to help you ensure you don't get those penalties, but don't get added to your tax penalties and interest. Number 7, you got to hire a tax professional that understands the realtor. Here's a great way to know if you're dealing with somebody that would understand the realtor. If you were to say, hey, as a real estate agent, I'd like to set up an LLC. If they say, oh, it's not really for you, they're not a fit for you. They don't understand the realtor. If you say, hey, I have an LLC and I'd like to elect for it to be an S-corp. And they say, oh yeah, S-corp's not really worth it for you. You don't qualify for an S-corp. Realtors can't be S-corps. You need to just go to somebody else. It's not that they don't know what they're doing at all, but they really don't understand the realtor. They don't understand that real estate agent, okay? And then say, hey, what do you think about me taking a home office? If they tell you it's a flag and all this IRS stuff, they really are out of touch. They're not really what you would want to hire because they're just simply incorrect. Number 8, here's the big one. Consider setting up that LLC and when the time's right, electing for it to be taxed as an S corporation. Why? Because when you are not an S corp, your net income as a realtor is received on Form 1099, and that net is subject to self-employment tax. That is an additional tax on top of your income taxes. It's 15.3% on your net income up to the Social Security limits. Now, if you're an S corporation, that net income as a realtor still paid as a 1099, but now to your LLC taxed as an S-corp, that EIN, well, that net income is not subject to self-employment taxes. Yes, there's a catch. You've got to pay payroll, but you get to control the amount that is then subject to Social Security and Medicare taxes, which is payroll taxes, and that's the same as self-employment taxes. You net 100 grand self-employed, not an S-corp, you owe 15,300 just in self-employment taxes on top of regular income taxes. If you're an S-corp and you net 100 grand, but you pay yourself a wage of $40,000, just pull a number out of the sky, you're going to pay self-employment taxes on zero. You're going to pay payroll taxes only on $40,000 or $6,000. Right there, you just saved 9 grand, not only that year, but every year after. So you pay a higher wage, you pay a little bit more in payroll tax. My point is, you are coming out ahead. So special note for realtors, if you are setting up an LLC, you need to first get with your state's real estate commission or real estate board and ensure it's allowed, and how to register that LLC with your board of realtors or the commission in your state. If you're in Oklahoma, you must register that LLC on your license portal with ORIC, with the Oklahoma Real Estate Commission. You must upload your certificate, a certificate of good standing, disclose your LLC name, of course. ORIC has to approve it. Your broker has to approve it. And I'll just say as a side note, if you change your address, you move brokers, you've got to update that information on your portal, your license portal, to ensure that you're staying in compliance. Huge fines if you don't ensure that you're in compliance with your real estate board, or in Oklahoma, the Real Estate Commission of Oklahoma. Number 9, retirement contributions. This is a huge tax win. See, this is the best deduction of them all because it's money to you. We can buy shiny things, we can buy things that we drive around, but they depreciate and they're gone one day. But when we are putting money into retirement, we are putting money towards us, our future, our wealth, and we're getting a deduction for it. Many, when I'm talking to realtors, they'll use as an excuse, well, I don't want to go on the market, so I don't want to do the retirement deduction. And you got to know these are two separate things. When you're putting money into an IRA, a SEP IRA, a simple IRA, a 401k, that's just going through a doorway. That's just paperwork. The money goes into that account. Then you decide, does it go into bonds, crypto? Does it go into a money market? Does it go into the market? Is it in blue chips, small cap? Is it in foreign investments? Is it in gold? Is it in silver? Is it just sitting there, right, in a CD? These are two separate discussions. Putting money in and getting the tax deduction is your best win. Then say, oh, well, I think I need to do a Roth IRA. Great, do a Roth IRA. But many say, oh, I heard a Roth IRA was better, but they're only using it as an excuse to do nothing. But that's your best tax deduction. And then number 10, don't wait until April to figure it out, just as I told you in the beginning. The biggest secret that, quote unquote, these rich people have is they don't wait until the year's over to pay attention to what they can do. They do invest their own time educating themselves on what qualifies as tax deductions, what is available to them. They don't just squirm come April. They're in the details. They're getting together with their tax professional throughout the year. And with that, they're truly aware and ensuring they're paying only their fair share of tax, no more, no less. So with all of this, to be a super successful realtor year in and year out, it comes down, in my opinion, to one thing: not overpaying taxes. 87% of realtors basically don't make it past 2 years. And what's really interesting is about the same percentage of small business owners and realtors don't become S corporations. So if you're overpaying taxes or you're paying too much in taxes, meaning if you're netting 100 grand and you're handing over $40,000 of income tax, state income tax, self-employment taxes, and you're netting 60 grand after all the things that you did after tax, gosh, I want to go do something else. But proper tax planning, proper setting aside, getting with the right advisors, these things can make all the difference. Now, you've gotten to here, which I appreciate. I've got a whole video series I'd love for you to check out. Links in the bottom. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.